Felix here, and welcome to this pre-morning live stream. We're, of course, joined by our chief analyst and special guest, Winston, and a cat or two. I want to walk you through the 3 reasons to be bullish, and then there are 2 more bonus reasons. And I also want to give you a little bit of a warning for smart investors and answer the questions everyone's thinking about, like, what do I buy? What do I buy? What stocks to buy? So we're going to walk through a bunch of winners in a moment as well. If you think you're going to get some value out of that, let me know by smashing the 1 button. The 1 button. It's the 1 button. Which button do I need to press on my little thing here? Here we go. 3 reasons to be bullish, bonus reasons to be even more bullish, and a bit of a warning, but just for the smart ones out there. I think most of you guys are smart, aren't you? So appreciate you being here. I'm sorry for the racket. I think I'm gonna have to put that cat in the room, don't I? Should I put that cat in the room? I think that might be required. If she comes close to the door, I will. Oh my God! How can anybody be that noisy? Okay, let me turn on the pre-market heat map, and I'll put the cat in the room. Come on then. Well done, well done. Good God, the red shorts are back too. So the morning looks absolutely freaking glorious from the point of view of the stock market here. The cats are excited. Everybody is excited. So let me walk you through why. Well, if you look at the S&P, and I did this here, actually, I took a screenshot of it. I can show you live. That probably makes more sense. So this is, of course, an Inside Trade Vision here, which is our the app that we're building for you, and continue to make the best data available to retailers so that you and me have the same data edge as everybody else. And you see that green box I drew in there? That's sort of the top end of where we've been. We're ever so slightly below that. And what does that say to you? Well, it says 2 things. One, if we get into that green box, and make it a little bit bigger for you, so we basically want to get over 6,100, we then have a chance at cracking an all-time high for the S&P. We're that close to it. And there's a little bit of resistance at 6,100, and after that, the market makers, those bastards who run the stock exchange, they're going to have to actually buy stocks. And if we go down, they also have to buy stocks. It's a pretty sweet setup from our point of view. So the market is very sweetly supported by those institutional buggers right now. And that's very, very, very bullish. If you would agree with me, then, let me know. Actually, does that make some sense to you? That might be the better question. Does that make some sense to you? If it does, put an S in the chat so that I know this actually lands for you. Blue box for people without yellow glasses. You're quite right. The blue box. I thought it was a green box. Oh my God. Yeah, this should come with a health warning. I'm wearing these yellow glasses, and I've been doing that now for about 5 days since I got them. I watched one of these biohacking loons on YouTube, and he said, if you don't wear those, you will die within 3 minutes. So I ordered one. And I'm quite liking them, I must say. So not an endorsement, but you know what I'm saying. So my colors are a little off, especially for blue, which is now green. This chart is also blue, apparently. And what is this? What is it? Does anybody know? Anybody knows what this is? You'll win a cookie, a digital cookie. A tokenized cookie. This is the NASDAQ Seasonality. Seasonality, big word for me to spell. And we is here, right? In June, the tail end of June. And typically, July is a glorious month. And typically, we go how much higher from here to the end of the year? Typically about another 11% up, if you believe that or not. Doesn't mean it has to, but it's just sort of where we are, and it just sort of generally helps to fluff up the market overall. Seasonality there, David, you get that cookie. It's digital somewhere. We don't know where it is. The kitty name is Blossom. That's actually quite a nice one. That's quite a nice one. And yes, it is 85 to 2024, Hubert. It is a little scary that you know that, but yes, you're quite right. It is not forever. It's a 20, actually, it's 20 years, 2020, to 2024. It says the date range here. So 20 years of the last 20 years of the stock market, usually we go that much higher. So you're going to ask them, well, what stocks do we buy, right? So I thought I'd show you one or two. Here is one, and you're too late on. How irritating. No, honestly, it's a great example. It's a really, really, really good example to learn from, because it's kind of our classic textbook setup, isn't it, Winston? Winston says, yes, classic textbook setup. So we got in on that here at $98, and I'll show you the proof in just a second. We're looking at that high. It sort of did this little zigzaggy thing. It broke out above the 50-day here. It broke out about the 150. We still weren't buyers. No, we were not. We waited for the dip down. We waited to take out that blue line. Crikey, it's so green. And we bought right here, right now. And some of you are not going to believe me on that. So I'm going to do something unusual. I'm actually going to show you. So if I may, there. This is one of my stock portfolios at the moment. Where are we? There we are. Can you see that? Can you see that? It's the top ticker right there at the top. Does that fuzz into focus? Doesn't, does it? Is that going to focus? There we go. Car at the top, right? See that? That's where we bought it. Up 68% right now. And we now have over 15 stocks that are up more than 20%. And I'm a trader at heart, right? So these are all purchases from May and June. So we're doing pretty nicely. And the reason is simply rules, and rules. And in fact, there was a second chance to buy it, which would have been here. And that was the breakout. Now, why is it breaking out? And why were we bullish on Avis? I mean, rental cars. Really, really, Felix, rental cars. Come on. A car doesn't get any more boring than that. Stand in line at an airport for hours and then be told that you're in the wrong zone and you got to take a coach for 9 hours to another Avis counter from where you'll have to walk for 65 hours to some underground car park where you get shot, murdered, and then you can pick up your rental car. That's usually my Avis experience. It's very simple. It's tariffs. Cars are getting more expensive. Why? Imported cars and imported components of cars are getting more expensive. And therefore, rental cars, the entire fleet of rental cars, becomes more valuable. Simple, isn't it, really? Really simple. So we're liking it. When we bought it here on earnings, volume also exploded. It actually doubled, which is exactly what we're looking for. So it's that kind of thing that makes us a lot of money. And again, you might think, oh, he's feeling this is making that up. Let me show you. This was my 5th of May buy list. So I put that out before I bought it, and I said, we're going to buy it closing above $98, right? Which is that line here, $98. So we bought it here, which is very, very nice. So how do you find those sweet setups? There are loads of them. I'll walk you through a few more. Well, I'll teach you if you want to learn. On Saturday, we're running a live stock picking, long-term investor stock picking seminar on Saturday, 10 a.m. New York time. It's completely free. It'll take about an hour and a half of your life to give you freedom and the ability to potentially make a heck of a lot more money for the rest of your life. I'll also teach you how you will never lose a lot of money again, because that's the first thing. We don't lose a lot of money, ever. We don't do it. It is just not permissible by our setup. Anybody can learn it. Don't need to know a thing. Don't need to have any amount of money. Don't need to have any experience. Don't even need a brokerage account. You really need absolutely nothing. And all you learn is what Wall Street does, because Wall Street does it differently to what everybody else does, right? That's ultimately, this is what this is about. The yellow phone is for the president when he calls Felix. Is that phone yellow? You're teasing me now, aren't you? That phone is white. Although with the glasses, actually still white. Weird. So yes. So who's going to come and join us and learn? If you want to come and learn and actually just learn how to make a lot of money potentially, put an L in the chat. An L for learner. And I just wait screenshot of this. This is at the very top of today's live chat. M. Crean, my friend, you wrote this. Hi, Felix. I just started watching you back in April. Invested $50,000 just 3 short months later. I'm almost at my first personal milestone of 100K. Try to attach a picture for proof. Nothing makes me happier. And this is precisely why Winston and I run this community. Where's Winston? Winston is slightly off the camera there. Because that's what it's ultimately all about. So congratulations, my friend there, M. Prehn. And if you want to be like Monsieur M. Prehn, if that's how you pronounce it, put another MK in there and just congratulate him, because he's obviously doing something tremendously right. And I'm sure that starts with risk management, because that's typically how we make a lot of money, right? So before we run through a bunch more stocks that are moving bigly and opportunities there, it's midnight in Australia, Rebecca. Yes, you have a curfew, do you, Rebecca? Not permitted to stay up on Saturday beyond midnight. I know some people are that. Some of our viewers are 6 years old. No, I always say that. People say, oh, I can't make it because of this or the other. It's just, what it's a question of? It's purely a question of motivation. That's all it is. And it sounds a bit harsh, but it's the question of, do you want to show up for yourself? Do you want to learn how to manage your money better? Do you care, right? Do you have a reason to do it? And if you don't, that's also fine. Don't show up. But that's ultimately what it's all about. Like, our entire behavior as a human being is driven by how big's the need. If the need's big enough, we'll show up for ourselves, right? If it isn't, then we don't. And that's also okay. Maybe you're reasonably comfortable with underperforming. All right, needled you enough there, Rebecca. Sorry about that. I always pick on somebody every day. You know that. Actually, one of you guys wrote me a very nice email a couple of days ago. I picked on somebody who said, why did I lose so much money on this stock? It really annoys me, blah, blah, blah. And I just said to him, well, your position, your stock size, your position size is probably too big. You're putting too much money into one stock. Otherwise, you wouldn't have even noticed the stop getting triggered and you being out of that thing. And he actually wrote me an email, which is very kind, and I should have screenshotted it, saying thank you. And that I was completely spot on without ever seeing his portfolio. And he's half his position sizing and he's much happier. So brilliant. That's exactly, where my satisfaction stems from, is to actually help you guys. Now, this one is I thought twice about putting this in here because it's a little complicated. And, I have a simple mind. It says here, and this is from Nomura Investment Bank, lower volatility will feed into massive buying by the volatility control crowd. Everyone's looking around going, who is the volatility control crowd? Where can I meet these people? They sound odd. And yes, they are, usually to be found under a bridge somewhere high on asset or something. No, in all seriousness, they are options traders. And they essentially have to buy and sell on certain points. It's how they hedge their money, and it's maybe a little bit complicated. But all you need to take away is that if the market stays stable or goes up, that means volatility stays stable or goes down, right? Volatility is another word for fear. So volatility equals fear. As long as the market does well, this comes down. And it means that those guys have to buy a very, very sizable amount of stocks, up to $107 billion, which is pretty good. So it's another reason why the market is likely to stay pretty stable here. And this is just data I just saw today. So this is pretty good stuff. Is that helpful? Is that a little bit too complicated? Let me know. Put a H for helpful or a C for complicated in there. It is a little complicated, it is, but it's how the market works. So now you know. I hope you know. Astrios, my friend, you're having some communication issues. Astrios, let me do one thing for you. Would you drop me an email and I'll get that sorted out for you today? It's obviously probably something landed in spam or something like that. Felix@goatacademy.org. Okay, drop me an email there and we will get that sorted for you. I'll also put it in the chat for you here as well, in case you can't write or read. Just a check. Okay, appreciating all the H's there, and also some of the honest C's there from some of you, like Teresa and McReady and so on. And yeah, there are some things of the market that are a little bit complicated, but most of the stuff, the basic stuff, is pretty simple. The money-making stuff is actually pretty simple. It's the big picture stuff that's actually a little bit more complicated, which is less important than you think. Now, that's also what Winston thinks, isn't it? Winston? I think the lower cheek says yes. I love that lower cheek. Look at all those little folds there. Now, two more bullishness, and then we look at some actual stocks together. Why should they buy vol? They have to, my friend. It's their hedging. They have to. They have no choice. So they're not linked to the the pension funds, which we look at again in just a second as well. We are being promised trade deals. We're being promised America First, 4th of July celebratory trade deals with countries as enormous as Vietnam, possibly South Korea. They are actually quite big trading partners. Well, Vietnam is a big flow through for China trade. And apparently not India, because that's still taking a little bit of time. If you've negotiated with Indians before, you'll understand why. Lovely people, but very good negotiators. So that could be big. Just a little deal will be good. And we will get rate cuts. Not now, not in July, I don't think, but they will come. So if you've got a horizon that's a little bit longer than a month, maybe more like 6 months, I'd say I put $5 on us getting rate cuts by the end of the year. See, I'm a big gambler, you can tell, right? Okay, brilliant. So that's hopefully somewhat helpful. I did give you a warning yesterday, and here it is again in its full unadulterated details. US pension funds are going to sell about $22 billion in stocks for quarter end. Now, they don't do that on the last day of the month. They do it in sort of drips, which is quite nice of them, really. So today is the 25th, so they're probably starting to do that. But considering the rest of the market setup, this is probably not going to have that big an impact. That's what I would say. If the hedge funds, the market makers are buying the way we expect them to, this should not have as big of an impact as I perhaps thought yesterday. So generally speaking, I'm feeling relatively bullish short term. And one of the reasons for that is also, well, not just that we're making a bucket load of money on Avis, but it's also just look at the VIX, right? Hang on. VIX. It's at 17. 17. That's like the lowest we've been at for, really like the lows of sort of the Trump presidency pretty much is 17, because this is a fairly volatile president you guys elected there. So 17 is where we're at, and that's very, very good. And it means the market is expected to continue to rise. How can you get my weekly stock picks if you don't do my training? Carl, you can't. I'm not somebody who encourages copy trading. I'm somebody who encourages that you learn how to fish rather than that you get handed a fish. I'm not huge into that sort of welfare state type stuff. So I don't think it'd be helpful. I think if I give you all my picks, I think you'll lose money because you won't know what to do with it. You won't know where to deal with it. And we see that a little bit here I see Zim quite a lot in the chat here, right? And people are going, oh my God, Zim is down. I see some angry people in the comments going, this guy recommended Zim, never watching him again, blocked him, all that kind of stuff. People lose their SHIT over it. It's one stock. It's a very small position. It really doesn't matter. Mine's down 12%. Maybe you got stopped out already. That's also okay. But it's irrelevant because we make a lot of money on a lot of picks, but we don't make money on every pick. If you want to make money on every pick, buy a bond. That's really it. Or just buy the index and do nothing, and you'll get your average 10%. You live an average life and you'll be averagely happy. If you want potentially more, you need to accept that there will be some losers. But the amount of winners that we have, and I did just show it to you. So if anybody's just tuned in later, for sort of fairness sake, I'll show it to you again. At the moment, we've got over 15 stocks that we bought in May or June, mostly in May, that are up significantly over 20%. So a lot of these are actually up. Cara's at the top there, 68% up. That's the one can you see that? Was that focus? There it is, right? So you just see some of those percentages. Take a screenshot if you like. No secrets here. But you might then think, oh, what about you losers? I'm sure you got some really big losers. Zim is the biggest one right now. There it is. These are the biggest losers. Can you see that? Right? Most of them are pretty freaking small. So they don't really matter because they get stopped out if they get too big, and therefore they don't really matter. That's how we make a lot of money in the long run. And you want to come and learn that? Well, come and learn on Saturday. I'll teach you. I'll tell you the secrets. There are only 3, They're really easy. They're really easy to learn. They take like, I do all my trading on a Sunday, right? So you could literally do this if you have a full-time job. We had a chap the other day who joined us and said like, I love this because I'm a trucker. I'm drive Monday to Friday, but I can do all this on a Sunday. That's absolutely brilliant. Absolutely fantastic. Coinbase is another one that looks very, very good. And tell me if this is textbook or tell me if this is textbook, depending on whether you already know our rules. If you don't, come and learn them on Saturday and you'll be able to answer this by the end of the weekend. If you just look at that, whether you look at it this way or you look at it that way, that was the buy point here. It keeps gapping up. Well, not actually gapping up, but it's gapping up here right now. So it looks absolutely brilliant, blowing through the resistance. Volume is tremendously enormous compared to everything else. And it's just, Coinbase, absolute blowout there, for example. Here's another one. This one's boring too. This collapsed. Interesting. FedEx just tanked. Interesting. I wasn't expecting that. But it is classic textbook again, and that's the beauty of you learn how we buy. Is you look at this sort of pattern here, right? A little bit of this, bit of this, bit of that, bit of this, bit of that. Well, actually up till there, and then you draw a line across. What was the highest closing price? That's the minimum I would look at. You could even go to the highest price. But if you just did the highest closing price, this one here, this blue line, then, well, we still wouldn't be in it. And we're not, because it didn't trigger our buy point. So today it drops to the low end of that whole zone. So brilliant, right? So we don't lose money because we didn't just buy it. We just clicked buy. We waited for that point. We waited for that indicator that makes it much, 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 much more likely to go up significantly than not. And the second part of that is that line up there is the 150-day moving average line. And we're also below that. So again, it fails on that count. So very, very useful to not buy things at the wrong time. BBAI. I was actually looking at that this morning. I was thinking of maybe making a video on that. It looks good. Yeah, it looks good. Doesn't mean you should buy it, but you saw my little trend line down there. That was potentially an entry point for the more conservative crowd. I think the entry point would have been yesterday or this morning. Gapping up again, looks good. Volume was huge yesterday. So yeah, looks pretty good. Obviously, this is BBAI, right? This is a bit of a nutty stock that moves, 44% in a day. So don't come crying home when it drops 10% in a day, because it will. I guarantee you. It went up 25% yesterday. So a 25% drop is also something you should therefore expect. So you got to ask yourself, is this good for my stomach lining? Is this good for my sleep? Because you don't need to make money with this. You can make money with really boring stuff instead, right? So it doesn't need to be the excitement. For some reason, we've been kind of programmed to always go for the exciting, whatever has dropped the most, whatever has moved the most. That is not what Wall Street does. And that is therefore not what we do. So I would not be buying this just because it has moved a lot or because it is called Big Bear AI. I need the answers, says George. Okay, good. QSI is finally moving bigly. Yaha, it is. It is. Are we still in that? QSI? Let me have a look. QSI, yeah, still in that. Bought that at 158. So we're at 205 right now. So we're up, we're up pretty nicely. So we bought it down here. Why? Textbook, classic textbook. Always the same bloody thing. Classic textbook, broke out here, ka-ching, and now we're making money. Maybe it'll go a lot higher, maybe it won't. Who knows? But either way, we're making money. ASTS, let me type in ASTS. And by the way, we got something really cool coming to this is the gift that keeps on giving, isn't it? I'm not in that, sadly, but it looks very good. we are putting out stop alerts. This is a beta feature at the moment, so most of you won't have access to that yet, but it's coming. We're just going to make it a little simpler to use. But you will then say, okay, say I want to know when it breaks out above, the high here at 53 or something. You just create an alert and say, I want it to be above, 54 or something. That would be that. Or I want it to be above the whatever moving average line, and I want you to remind me for the next month, that kind of thing. So it'd be very, very cool. And then you get those notifications in the browser, and then next step also on the mobile app. So very excited for that. That's part of Trade Vision. It isn't out yet, but it's coming. So if you want to get access to it before this comes out, there's a free trial for it as well. There's a barcode even here, a QR code, so you can get direct access to the mobile app as well. Teresa, you sold DRS. Okay. Yeah, I can see why. I can see why you sort of dropped below that zone, and you were feeling like you wanna log that in. Are we still in DRS? Yeah, I'm still in it. But everyone has slightly different stops. Doesn't mean you should be, by the way. It's always a good decision to have your risk management done. What's coming out? BB, yeah. Woo, haha, hee. That looks pretty good, doesn't it, Winston? Winston, what do you think? Let me show you. Winston is very excited about that, isn't he? Look at Blackberry. You're blocking the entire screen. That matters, Winston, all of it. But then he's very cute. So yeah, that looks like a beautiful little gap up there. Obviously, earnings delivering 100% surprise on earnings. But it was a 1 cent. It was a 1 cent beat. But yeah, looks again. Textbook. So come and learn how this textbook thing works, because that's how we keep making money again and again and again and again. And then you can be as relaxed and happy as that guy. So how do you learn that? Show up for yourself on Saturday. felixprehn.org/I wrote class. Does that work, that link? I thought it was webinar. Let me just check that works. Nope, that's the wrong link. Sorry about that. That's the wrong link. I shall delete it. I shall remove it. I was wrong. I shall repent. Will I be forgiven? Let me just fix that for you so I can put the right link in. The /webinar link is correct, but that one is not. Webinar. There we go. That should do the trick, right? Yeah, brilliant. So check that out. Carl, looking forward to that feature. Yeah, we got a lot of really cool stuff coming up. Appreciate that, and appreciate your guys' patience. We're just trying to make it a bit more. At the moment, this is the features, but it's just a little too complicated for most people. This is just going to be too complicated. So we're gonna simplify the usage of it. But yeah, very excited for that too. That'll be great. So I have Android in my Trade Vision. Lines doesn't stay after selected in my chart, says Adam. Adam, would you send us a little message to support our support thing? There's a little support thing in Trade Vision in the bottom right corner, because then we can actually look into your account, and then we see your email address, and we can see like what the F's going on there and how we can fix that for you. Because these lines they stay. So if I pull up here in Trade Vision.blue line, right, and then I open it up on the app, and I type in BB. On the app. Where's BB? Here's BB. Then you see that? Can you see that here? That's what it looks like. And then there's a little button in the bottom right corner with a sort of writing symbol. And when you toggle that, in theory, your line shows up. But it doesn't today, because I'm telling you that it does. Interesting. All right. You might have found a bug there, my friend. We'll get that fixed. So that's why, honestly, your guys' feedback is so tremendously useful, because every single day you tell us little things that don't work as they should, and therefore we get to fix them way 10 times quicker than anybody else would be able to, because we have you. So thank you very much for all that feedback there. It is. Oh my God! It's 9:30. The market is open. What do we need to do? We need to get the bell, don't we? We need a bell. Where's the bell? All right, there it is. Winston, are you ready for the bell? Are you ready for the bell, my friend? If you have sensitive ears, do something. Winston's getting used to the racket, isn't he? The market is officially open, which of course is tremendously exciting. It's what we're all waiting for all night long. We're just like, can somebody please open the market? Because what we're going to do with ourselves otherwise. And yeah, Blackberry is gapping up here 13.5%, which is a pretty bigly move. The other thing that was blowing up was car, which is, well, down 1% on the day, but it's still a pretty big win there for us. The volatility index is at 17.07 cents, which is not something I would have predicted by any stretch of the imagination. Thanks, I'm deaf now, says David. Brilliant, my friend. Solved all sorts of problems, isn't it? And you can't see the screen either. All right, okay, there we go. Here is the VIX index. Is gold in a pullback? Well, have a look at gold. And it's basically at the 50-day moving average line, right? Slightly below it, which isn't brilliant. We haven't done that since November. What about some of our favorite gold stocks? Groy, for example, unimpressed, moving up today. What about El Dorado Gold, for example? We're in that one, aren't we? Ego. Down 0.3% today. Any other gold stocks you guys can think of? We're in loads of these. I can't think of them all. SKE. Flat. So the miners, at least, seem pretty unimpressed. Don't ask for Bell wearing headphones. I did warn you. This bell is about to be noisy. Nari's asking BlackBerry what price to sell. You need to answer that question before you get into a stock, my friend. You need to set a stop. You need to learn where to set a stop. Please learn that. NGD, yeah, that's another one, isn't it? New gold, again, flat, looking good. Is waiting a month too long to earn a 25% return? I think if you make 25% every month, you would be, I mean, have you compounded that? Seriously? We have if you type in Goat Academy compound interest into Google, you come up the top of the search there. If you really did, and this is a silly rate, but if you did 25% a month, and you just had $5,000, you did that for like 5 years, how much money would you have at the end? You'd have $3 billion. So it's probably a little bit of an unrealistic expectation. Certainly when you have a lot more money, it'll be harder to do, just because you start moving the market with your $3 billion. So I would say 25% a month is a little unreasonable. Now, do we have 25% months? Yeah, of course. I mean, not of course, but I have them fairly frequently, but not every month. Right? So set your expectations at a little more of a reasonable level is what I would suggest. And I, for myself, set a relatively modest target, at least for my historic performance. And it helps me stay calm because I never have any pressure. I'm just like, yeah, we're doing well. We're doing better than expected. And I think that's a good thing to do. It's like lower your expectations. Zim here is up 2%. Let's see where that goes. It's a little bit below the 50-day moving average line, so it's not looking absolutely brilliant. 6% a month is double per year. Yeah, so again, do that with 6% a month, which is, again, an extraordinary return. Again, not promising you any. Then just in 1 year, year one, you turn the 5,000 to 10,000. By the end of year 2, you have 20,000. By the end of year 3, you have 40,000. By the end of year 4, you have 81,000. By the end of year 5, if you're having fun, you have 60,000, right? Do it for 10 years and you have 5.4 million. Now, it might be easier to put a little bit more money into the kitty and aim for slightly lower returns, but yeah, that's a good thing. Do you ever sell if it goes sideways too long? Yeah. If I look at something, I don't know, like say new gold, and it just goes sideways, volume maybe fizzles off. I'm just like, whatever. So I might just tighten my stop then and then get out, but not prematurely, because the market, you see, there is something about winners that tend to perform. And to go back to the one I showed you at the beginning of this car here, for example, it did well. You know, I bought it here. It did well. 10 days, it was up 15%. But then 30 days later, you know, at this point, it was up 24% in 5 weeks, which is pretty good. But maybe you could have bought on board here in that section because you were at the same performance on day 13, and then 3 weeks later, you're still there. So maybe you would have bought bored with that. And then look at the reward that sometimes kicks in a little bit later. So patience is a good thing. But generally speaking, we get knocked out because things go down, not because they go sideways. Tesla is down. Is it? Yeah, 1.1%. I mean, it's a 1% move for Tesla. Like, does that really matter? I think you're going to ask yourself that. Interesting, we always see inside trade vision. I think especially the beginning of the day order flow, one of Winston's favorites, as you can tell. Just had to roll over on that news, and you can see like what the institutional money is flowing into, right? Pretty at the beginning of the day, pretty quickly. I think it's quite useful. ASTS, for example, dropping there. But yeah, if you wanted to look at just Tesla, you can also do that. Just type in Tesla and see if anybody's doing something with that already. Oh, this was some. Yeah, this is today, Wednesday, 25th, and you can see a lot of hedging. $6 million going into puts. So quite a lot of money pouring into this already, but not in the most bullish sense. It's very bearish right now. So institutions might have something to do with that. Might at least. To use a dollar account instead of local currency, yeah. I do everything in dollars. The dollar makes the world go round. Even if you live in euros or sterling or some other monkey currency, the biggest stocks in the world, the biggest stock exchange, the biggest funds, the biggest pension funds, everything is US dollar based. So in the long run, your currency exchanges don't make any difference. That's at least historically been the case if you're making money investing. And secondly, yeah, what's the alternative? I mean, your local stock exchanges usually are pretty shite, aren't they? I mean, the European exchanges are freaking disaster. Okay, the Germans have been lucky because they're warmongering very well this year, but historically it's still pretty much a disaster. The British Stock Exchange is just a laughing stock. So France, I mean, without LVMH, I'm not sure there would be a stock exchange. You know, it's just not being harsh here, but it's just true. Like, just don't buy local just because you live local. Buy the best. That's what I'd say. And the best stock market in the world is in the US. No question about it. You may love or loathe the US, doesn't bloody matter. It's your money. Is it too late to buy CAT? Well, it's broken out a little, hasn't it? Out of that zone. It has broken out. What color is that line? That is that funky color. So what do you see here? You see that sideways consolidation, bit of a breakout here. Not a big one, but a little bit of a breakout. And then it's you know, it is usually lower risk to chase a breakout a little late. And I'm not talking here 80% up, obviously, but like a little late. So it's not a huge thing. Again, I'm not telling you to buy it, but it's up like 2% from the breakout. So it's not exactly like an enormous move. So, you know, I often enter a trade and then a position, and then I add more to it a little bit later as it keeps going up. Poland is the best in the world so far, 2025. Yeah, but that's a very short time frame. I would look at a decade, and I know the Polish economy has actually done very well. Poles are hardworking lot. I think you're about to overtake the Brits for wealth, which is kind of funny. Not for the Brits, but it is quite funny. So you just got to look at the longer term horizon and just think like, what money must flow into Polish stocks, Polish pension funds? How big are they? Right. Whereas US, it's like all the pension funds in the world flow into the US market. Right. So I would rather be in the thing with the biggest demand. Here is Estee Lauder, looking good, isn't it? Nice little breakout there. Okay, yesterday it was down 2%, today it's down 0.8%. You gotta learn to not care about those small moves. And the way you do that is that you just, you know, wherever you buy this thing, and say you bought it, you know, say you bought it here, which would have been the sort of the logical thing, or maybe even a little bit late and you would have bought it there, actually there probably. And then you set a stop, and maybe your stop is, you know, I'm not telling you where to put it. I'm just saying, you know, maybe your stop is here, maybe your stop's all the way down here, or even at the 50-day, and that's it. and you just forget about the thing and you just don't watch it. You don't look at it unless it goes up another 10%, in which case you're going to move your stop up to say that. That's the only thing that matters. Stop looking at your stocks every single day and wondering whether it's up 0.5% or not, because it makes no bloody difference. So just, go out and do something, get a life. Now, for all you guys asking about stocks and how they're doing, there's one thing I got to say to you a lot, and that's this. Just learn the rules. And you will never have to ask them again. You're going to feel so much better. You're going to feel so much more confident. You're going to sleep better, right? You won't have to tune into this madness and have to watch Winston's pause, although they are lovely pause. And it just changes everything once you know. Imagine if you were driving a car and at every single turn, you'd have to phone a friend and say, do I go left or right or straight? Right? And then you go to the next street, turns off, and you go, do I go right or straight? I mean, you would go nuts, right? That's what people are doing with stocks. So wouldn't you rather learn the route, like go down the road, 6th left, 4th right, and then you park. And once you know those rules, and they're literally that simple, just life becomes better and easier and more automated and just less effort, more output. And that's ultimately what it's about. And the biggest thing is that you will never have those big losses again because they are so easy to avoid. Like, the Estee Lauder crowd here, right? People are in, I'm sure people are still in on that who were buying this, at these horrible prices up there. And they're now down like 70, 80%, right? It is entirely avoidable with like one simple fix. I'll teach you that in the first, probably 15 minutes of Saturday. So come and join us, felixprehn.org/webinar. There's a link down below. There's a link in the description. And oh yeah, and obviously there's no crime in showing up and us having a bit of a natter about stuff. But I see some people in the chat here who just they're worried about a stock, right? What do I do, right? Where do I set the stop? Where do I get? Should I buy? Do I sell? It's like you can almost feel the anxiety there, and we can remove that by actually teaching you how this really works. So I look forward to seeing you on Saturday, felixprehn.org/webinar. And Winston and I say, Winston's pause and I say, have a beautiful day and all the best.